Good morning, ladies and gentlemen, everybody. Ladies and gentlemen, everybody. Good morning, Rico. Good morning. Good morning. Give me a second here. I gotta send out an email to someone or do something. Good morning, couple people. We will get started here in just a second. I gotta do something real fast. Start it. Almost ready. Sorry, guys. Okay, good. Now we're good, all set. Welcome back, everyone. Welcome back. There's been some penny stocks today. They're okay, nothing super great. So hopefully maybe some of that changes at some point today. Um, as far as the market goes, market's obviously still positive. We're still into a swing long buy signal. I am still long UPRO myself. So yeah, until the volatility markets tell us to pretty much be bearish, we probably won't be. So yeah, we'll just kind of keep chugging along on this upside until pretty much stated otherwise. So yeah, rock on, brothers and sisters, rock on. Um, yeah, it's about that. Wish I had a whole lot more to say here, but yes, it's the same thing every day. So, um, you know. Right now, we got a volume weighted average price target right about there. We'll go into Bitcoin real fast. So, obviously, for the five of you guys watching, I'm assuming you're probably here yesterday. So, you guys will obviously know our kind of current pullback targets yesterday were to there and or down to there. So, essentially, Bitcoin has sold down to our expected pullback level. And obviously, we've mentioned we're not looking long bias until we basically hit one of those two levels. And that's right, I'm going to use my drawing tools from Zoom. Yeah, so again, pretty much to put it simply, again, Bitcoin had some daily support levels right there. We said there's no point of being long up here. Might as well wait for it to pull back to support, pulls back to support. There's your long entry and bounce up. So if you want to be kind of involving yourself in a short-term trade on Bitcoin, that would have been your opportunity. What time did that happen at? Because I wasn't even around for it personally or looking at it. So that was at 1300, 4 or 5 o'clock or whatever. So pretty much right into the market closes, really when that started catching some support. So good tradable opportunity there. I guess you could say provided before it happened. So that's good. It's always good. Yeah, but again, really that doesn't change a whole lot of anything when it comes to Bitcoin, because again, we're just still expecting lower or under performance for the foreseeable future. I hope that's wrong, but we'll see. So really nothing to do with Bitcoin at the moment as far as short-term trades or really any of that. Good jam. Um, the only thing I can see is if this bounce obviously keeps going, we're just going to be aiming up towards 106,800 to 107,800. So right now markets are pretty much going to be trapped in between this high and that low. So whatever the markets want to do, your next stretch is going to come from above or below that. So pretty much that's how the market's set up. You got this compression zone, and now we're just going to have to wait to see who wins or loses that battle to get kind of a new extension leg, if you will. So yeah, we'll just see how that develops, and when the time comes, we'll talk about it. Ba-da-ba-ba-ba-da-ba-da. So yeah, let's pop over back to the old find the goo. Let's take a look at the volatility market real quick. Doo, doo, doo. Volatility is still not triggering anything of concern, so that's good. Yeah, so volatility markets aren't really doing anything currently that would suggest to us, oh, you know what? Sorry, this mic was all the way to the other side of the, probably weren't hearing so well. I apologize. But anyways, yeah, volatility markets aren't doing anything that should really make us scared. We'll see what market internals say for the day if those start to change. I'm sure we'll be bearish in the morning, or again, that's pretty much what it always comes down to. So you just read the market internals, whatever those are saying, you basically follow that in the immediate. If volatility starts to break out, then we got to start transitioning bias. So it's still a dip to long market, as I mentioned yesterday. We're still looking for basically pullbacks to higher low and continue up until essentially the volatility market tells us otherwise. It's yeah, I would say it's yeah, that's pretty much it. I could keep going on about that, but there's really no need, I guess. What is that? LPTX. Hmm, that's not terrible, but kind of late. So, yeah, it's way late, of course. There's- So yeah, again, we're just gonna be chilling, waiting for the open and seeing what kind of cool stuff comes. Try to make a dollar here or there, and then we'll call it a day as per usual. I haven't looked at the news, but obviously I'm just gonna assume everything's positive because obviously the market's up, so you just assume that, they're gonna be discussing. Actually, well, let's see. Hold on. How do I do that? Control or Shift. So let's see what we got here. Stocks making the biggest pre-market moves. Stock market today. Futures rise. Silver extend rally. Stock market today, Nasdaq futures rise as AI hopes swing back. I mean, these people flip flop the AI thing so much, it's ridiculous. Again, last week everyone's scared of AI. Week before that, they're not. Week before that, they are, and now we're not. So it's just interesting where they make up this randomness. Nasdaq futures gain as AMD leads tech. All super basic stuff. Santa Rally arrives when the stock market sputters to open November. Like, okay, market watch, just chill out. All right. So yeah, pretty much what you could expect. Most of your Dow soars more than 550 points as Wall Street embraces optimism. Let's see what they're saying. Wall Street embraces optimism that the government might reopen. The government 100% will reopen. It's not a might. It guaranteed we're going to reopen. So yeah, just again your basic news cycles of nothing really. But yeah, again, to be expected. It's always to be expected that news is positive when the market is in a buy signal. It's very rare that you're going to get negative articles coming out in a buy signal. Generally speaking, and it's not entirely true, but again, when the system's positive, the news is positive. When the system's negative, news is negative. All right, that's pretty pretty simple simple thing. But I do remember when I first started watching markets, I would always kind of be looking at news. I'm like, oh, like, this sounds bad, market's got to go down now. Or this sounds, good, market's going to go up, which is kind of true to a degree, but it all really just stems from the markets being either in buy signals or sell signals, right? So, um, which again, the eight of you guys here all know that by now. So, no real questions there. So, yeah, again, there's not a ton to say there. Let's go look at our 30 minute. Hmm. Another big algo on the downside. Yeah, so I mean, another thing to think about is well, let me just double check before I say that. Let's see. So that was hit. Awesome. 161. That's untested. That is tested. It's untested. All right. So in the event markets do end up seeing, some sort of, big, I don't want to say call it big weakness, but even some weakness. Again, we do have targets on the Nasdaq as low as like, $633. Wait, no, hold on. 623.70s to 623.25. So if markets don't just keep going up in their buy signal, we get a pullback in the day. We'll arguably be looking at taking Nasdaq down to like, 623s, 623.28. Does the market pull back there? Don't know. Why don't I know? Because the markets move based off of the market internals. So if the market opens and everything as far as market internals are bearish and they remain bearish, then we're not going to be looking to trade bullish in the immediate. If we're not going bullish in the immediate, then things are probably going down. And if that continues to progress, QQQ has targets down to 623, 623.25. That being said, the market is in a buy signal. Thus, betting bearish is betting against the trend. We only do that if we feel comfortable that the market internals are bearish enough to trade bearish in the immediate, or if the volatility index tells us to sell the market. Right now, the volatility index has not told us to sell the market. The only thing that might, when we open, is the market internals. So, we are in a swing long market. That means things generally go up. They don't go in a straight line. They go upeth, they come backeth, upeth, down. So, up, pulled back, up, higher low, higher high, higher low, higher high, etc. So,
You are seeking out pullbacks to higher lows. All right. Those pullbacks happen when equities sell off in the uptrend. So we'll see. Don't know what's going to happen. All I know is how to read some market internals and, a couple other things. So we'll see how that all develops as we come into the open. If we just kind of sink out of the open, the first scalp target down you're going to see is pretty much $684.68 on the S&P 500. So just an FYI, this is currently kind of one of our targets down, which I already put a line there, etc. So or wait, did I say 628? I meant 684. Maybe I didn't. I don't know. So 684 there. That'll be one of those kind of first pullback destinations as it relates to the SPY. Super talkative chat here this morning. Extremely busy chat here on the old YouTube. Don't really have any penny stock that I'm keeping my eye on for the moment. No, everything looks a little extended. Nothing really has been taken off great this morning. There's been a couple things moving, but nothing I'm fancying too much. So we'll flip them and see if something hits support during the day that makes sense to take a stab at. But for the moment, nothing. I mean, there could obviously be something that I'm missing, but what's right in front of my face isn't screaming at me. I mean, pretty much all of these up here in this little scanner to the right, and there's nothing. I mean, that's not entirely true. I mean, there are stocks that are in uptrends, but I don't see any that are currently pulling back to support or cl like too close to support. I mean, there's FTCI. Um, that's one, but nonetheless. So, indicators, really not many. Um, not that I never look at them, but as far as, RSI or MACD, I don't really look at those too much. I mean, realistically, what I use mostly is going to be SMA trend and then some standard deviation here and there. But as far as indicators go, I mean, realistically, we're just mainly looking at trend over anything and then volume weighted average prices. So, if you want to call volume weighted average price an indicator, which I guess it kind of is in a way. But yeah, I mean anchored VWAPs and that's really it. Like anchored VWAPs are really like the only indicator I truly use. I'll use some Fibonacci and things like that, but it's really just SMA trend, Fibonacci, um, anchored VWAPs. I do use standard deviation. Standard deviation is also an indicator, if you will, standard deviation channel. But that's pretty much it, those four things. Standard deviation channel, and then behind the scenes, I'll occasionally look at some MACD or some RSI here and there, but it's not kind of one of my first go-to things that I think about. First thing I think about is the market or stock in an uptrend? If it is, that's first thing, right? Then is it extended from support? Is it near support? Has it already pulled back to support? And things like that. Start considering kind of how markets actually flow. They again they go up and down, right? So if they're in an uptrend, they're going to go up. If they're going to pull back, it's pulling back to support. Yeah, I don't really use exponential moving averages. I use simple moving averages. In theory, simple moving averages are, eh, I guess it's everyone's opinion, but um, they're a more true calculation than exponential because in exponential you're weighting it, so you're kind of manipulating the initial calculation by weighting it to get it to move faster in the hopes that you'll be indicated of something quicker than that of a simple moving average, etc. So, remember that right now, this volume weighted average price that I'm pointing back is the scalp down target and still current support trend from this low in the 30 minute. Pretty much the market will not sell down unless it's below that, right? So we always kind of think of this as a first pullback area. If the market holds it as support, we kind of stay up. If we can take it out, then we might start looking at pre-market lows and things of that nature. Now, not saying that exponential moving averages don't have a use case or, don't provide good trade or value and things like that, but simple moving average calculations are just kind of like the original, if you will. Okay. Oh boy. Oh. What time we at? 9:25. 5 minutes until the market open. That, excuse me, just to kind of, computer is tweaking out. Oh, I love it. Figures. It's gotta be Zoom. But then again, Zoom still works. I don't know why. It's just sweet. Love it. Love it. Love it. So weird. It doesn't make any sense. It's like I can close out the browsers, but then it's like it doesn't. I don't know. It's just weird. Um, so yeah, we're gonna go take a peek at SPX, and really this is just to kind of re-emphasize the whole point, which is that the market's in a buy signal. So if we just kind of look at this 30 minute, you can see clear as day when we flip the market's positive, right? So the market was positive, then we were negative, and we had an oversold bounce, so much so that it flipped the market on the SMA, and now we're back to positive, right? So market's just on the positive side. When there's makes sense to change, we'll let you guys know. Whoa, don't want to do that. Let's get back. Oh my Lord, Thinkorswim or TradingView. Come on, little guy. Little guy. Alrighty, and the market is, I don't even know what it's doing. It's just doing whatever it's doing. Pulling back down to the volume weighted average price, probably, or close to, etc.
Where did that go? Oh no, the market is going down, guys. What's happening? What is going on, everybody? Oh no, market pulling back to said level. Well, not quite, but pretty much. That's crazy. Who does that? Who there? All right, so we've pretty much completed our first initial kind of pullback scalp down towards that volume weighted average price. There's obviously more room to it, whether it be a couple pennies or whatever, but again, that's a pretty common thing we see on a day-to-day basis. That's why I mentioned it. Um, yeah. Or no, I don't want to upload a video. No, I didn't actually know that was a thing or happening, except no. All right, so market has pulled back too. Volume weighted average price as suggested. Kind of taking it out a little bit, no big deal. First initial look at market internal since the open would be advancing declining issues are up because obviously the market gapped up. First candle on your mega cap stocks is red, so hence red candle on Nasdaq and SPY. Looks like our it's getting a little, yeah, don't really have a good vibe for the tick charts right now. And then the volume of the market is, and it's not, so I'd say it's not extremely bullish. All right, there's our pullback target on the Nasdaq hitting. Remember, we said we'd be looking at pullbacks down to 623.70 to 623.25 on the QQQ. So we have now kind of completed one of those first pullback destination ideas, not only on the SPY, but on the Nasdaq. So there is one of our pullback targets for the day. Completing. Congratulations, everyone. Cheers. All right, we've now hit 623.25. That was, again, one of the targets there. Again, if you, well, not again, it's just, yeah, this market's just pulling back. You have all your mega cap stocks selling off so far this morning. It's very hard to see markets go up when your mega cap stocks are pulling back. Hmm. What? What? Hmm. 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 Well, and if the market's pulling back like that, generally penny stocks don't run as much. All right, so right now we're pretty much just going to be letting the market sell off for as long as it needs until it catches some support, right? It's pretty much the name of the game at this point. The volatility market has jumped up a bit. The volatility market does, wait, hold on. I was gonna say that's not right. Hold up. Something's off. Is the VIX even open? Yeah, it is open. 1727. Nowhere near that. Huh, interesting. So we see this morning that the institutional volatility is moving ahead of that of the volatility index. So one could read this morning that there is some hedging going on in the institutional world on the market, though it's not fully expressed in the volatility index. We can see that.
institutions may be starting to hedge a little bit. I wouldn't say it's confirmed though. To confirm volatility, or well, institutional movement, we would really have to be securing a move over like $104. But there is definitely some hedging going on this morning in the institutional world, hence probably such the aggressive sink out of the gates, in my opinion. So today, this pullback we're seeing, I wouldn't necessarily call it retail, but I would say there is some institutional involvement on that pullback this morning. I mean, there's institutional involvement all the time, right? But we can at least see some potential form of hedging going on in the market this morning. So this isn't necessarily just a pullback, right? There's a little bit more to this one, so just be mindful of that, right? So when you're thinking of buying dips right now, not that a dip won't work, but I myself would like to be seeing a little bit more data as to why is the institutional volatility creeping up so much this morning, right? Is it a telltale sign that soon we'll break out the VIX? Again, we'll see. But again, we haven't confirmed that until the institutional volatility gets over about $104. So we could be coming into a rejection point too, which just really just boosts us back up into a long. So again, still a little soon there, and we gotta give it some time. All right, we've reset the 1 minute volume weighted average price in the day. Just and you guys already know that's a typical thing we always look to do. Also, do remember too, institutional volatility is the preparation for potential vol VIX increase, right? So just because the VVIX is up doesn't mean we're super bearish, but it says to us, are some institutions starting to hedge for maybe something that's to come? Now, I know we have, what do we have tomorrow? I think there was it like CPI tomorrow or something? So we might be seeing just an increase in hedging due to that. That's probably the case. Let me just double check the economic calendar. Yeah, Thursday, initial jobs came, CPI. So we are just essentially seeing a form of, potential hedging leading into tomorrow's data is really all it is. So it's not necessary that the market is meant to go down in that case. It's just probably hedging for the data that's coming tomorrow is all. Okay. Yeah, advancing declining issues are moving pretty solid so far. Um, on the day. Yeah, I would say like though we're pulling back some of the Nasdaq and stuff, the advancing declining issues so far on the day are doing pretty good. So if we get some turnaround on some of those mega cap stocks, it could definitely help, keep the markets up and so on and so forth. So that would be something nice to see. Some of the Magnificent Seven maybe kind of turn around, get supported, and then we'll actually see this market get bought up, hopefully. Some of the Fang, magnificent. I wouldn't say they're getting green. I mean, it's literally just one minute candle, but do 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 do. Okay, yeah, I mean, not a whole lot to say here. Again, we got sliding mega cap stocks. That's why your Nasdaq's going down. We have institutional volatility up, arguably some hedging going on in the market. Again, we're not set up for a super bullish day right now. It's just not how the market's positioned. We start to take out this low of day volume weighted average price here. It might help add some selling pressure to the market. Just kind of depends. It can be a stop out level for some, but at the same time, it's also a potential 1 minute trend support. So it just kind of depends. Do we support it or not? If not, then we obviously continue sliding. Um, yeah, I don't really want to say continue sliding, but right now the mega cap stocks not helping the market. They're still kind of sliding downwards. Advancing declining issues of the market are doing okay. S&P issues are doing okay. But like we said before, when you don't have the participation of the mega cap stocks, it can make it a little hard to get markets to go up. Hmm. Now, if we start again, if we start to get institutional volatility over about $104, we're at 103.17. Could very well be a good signal that the markets are hedging for CPI tomorrow, which again, I can already see the markets are hedging for CPI tomorrow. It's not if, it's they are. Marty, just more confirmation that they would be. above 104. So again, that's another reason why our markets are kind of struggling this morning is because the arguably the smarter crowd is hedging for tomorrow. We already can see it, you know. So there you go. There's your market going down a little bit more. Like we said, it's gonna you have to get into the open sometimes to get an idea for how the market wants to trade for the day. Right? We're in a buy signal. We know the markets are in an uptrend, but they only go up if the market wants them to go up. So far today, we opened up on the market. All the mega cap stocks are pulling back, right? We see institutional volatility is starting to hedge on the market. That means they're not extremely bullish in the exact moment, right? So you can now look at your market. What have you gone today? You haven't really had much bullish movement. You had a false little low a day bounce. You've seen the Nasdaq slide out, etc., right? It's hard to say exactly that that will be the case until you see what happens when the market opens. Granted, I'll say that the market's also not super duper bearish, right? I would say the Nasdaq's definitely got some selling on it, sure, but the SPY isn't really that bearish. I mean, yet, if you will. And the advancing declining issues on the stock market are actually doing pretty well. So there's a lot of stuff behind the scenes that are actually getting bought up right now. It's just that the mega cap stocks that are kind of lackluster, if you will. So if at any point those kind of slow down, the S&P or the SPY essentially would bounce, right? But we'll see if that ends up coming too. There's a big old drop. Yeah, this is all in line with what we talked about, which is the market isn't extremely bullish today. We see some hedging in the market going on, etc., etc. Excuse me. Ricky, yeah, actually our website, if you go there, you'll notice there is a broad market live stream. You should be able to access that for free. You might have to add your email, but you should be able to access our live stream for free. And then any content or any strategy or anything that you want to learn from me is all presented in these live streams for free and every single video I post on YouTube. So there's nothing that you could really pay for in my website or me and my business partner's website, if you will, that we don't already give away for free. So yeah, so everything you need, or I guess that I could provide to you, is given away free online. So just keep that in mind. And if you do keep tuning into our live stream here on YouTube, you should effectively learn how the stock market works and not really have to pay for any course, pay for any subscription. Um, Really, you wouldn't even have to watch many YouTube streams unless you just wanted to for entertainment purposes, you know? Again, guys, we're not super bullish the market right now. In the immediate, we're bearish. All of your mega cap stocks are pulling down. Institutional volatility is increasing. So we know that the smart players this morning are hedging. The VIX should go up to about 1774, or yeah, $17 and like 74 cents here or so, give or take. Um, this is something that we try to emphasize, right? Is if you kind of go on the internet, you know, so Ricky, the SMA trading that you're seeing, so normally you hear me talk about it on the SPY, but you can actually use that same strategy across everything and penny stocks. So yeah, I mean, so what we talk about, as far as that SMA on the SPY, you can use it on the Nasdaq, you can use it on penny stocks, and you can use it on all stocks. Once you start to use that SMA system on everything, you will start to learn that the market really just works in one way, which is uptrends and downtrends, and that's controlled around that 50 SMA. So you'll see algorithms work the exact same across everything. It doesn't really matter what you're looking at. So again, penny stock. S&P, QQQ, volatility index, they all follow the same exact system. And so once you kind of see that system across everything, you can kind of line your charts up to start reading them like a book, if you will. So for example, I'll pull this screen down real quick so you'll see this one here. So like um I mean there's a little more to it than that if you're, you know what I mean? Because markets can diverge, right? So for example, let's say the S&P is going up, right? The Nasdaq doesn't have to be going up, which is a perfect example of today too. If you look at the Nasdaq, you'll see its sell-off is far more deep than that of the S&P. And that's because if you look at this page that I'll enlarge right now, first here, we'll look at this one. Oh, dang it. Come on now. One second. So if you look at this one here, this is a combined ticker chart that I use. And you can build this however you want, but mine has Apple, Microsoft, Amazon, Meta, Google, Nvidia, Netflix, Tesla, and there's some other ones in there that are probably important to watch too, so on and so forth, right? So this is obviously mega cap tech stocks predominantly. So they're all pretty much selling off as a collective whole. All right. So then when you look at your NASDAQ and you see your NASDAQ's getting smoked this morning, and you look at your combined mega cap ticker, which is predominantly tech involvement, and they're all getting smoked, there's no longer the question of, well, why? Well, you already know there is a there's a huge capital outflow of your mega cap stocks, and that's going to negatively affect the price action of the stock market, specifically the Nasdaq in this case. All right. Now, if you look at the SPY, right, you'll notice that it's not going down quite as fast nor as hard as the Nasdaq this morning. If you look at the S&P issues, the S&P issues are bullish, right? So now you can kind of get an idea for, well, maybe this is why the S&P isn't selling off quite as harsh as the Nasdaq, because many of the issues in the S&P outside of the tech stuff are actually getting bought up. But those little stocks, if you will, not little, but littler stocks or smaller market cap stocks within the S&P 500 are not strong enough to outweigh the negativity being brought by that of the major market cap stocks. So the S&P still goes down while the S&P issues are getting bought up. Hence the story that the stock market is run on just a handful of stocks, as we've all said for some time now, right? So that's part of it. So when you ask about, well, can I use it on the Nasdaq and what about the SPY? And so the SMA system can be used very versatile. It's very versatile in the sense that you can use it on penny stocks, Nasdaq, S&P, volatility, etc., individual stocks. But just because it's flipping the SMA on one doesn't necessarily mean that it has to trade one way or the other, etc. It still comes down to a lot of times reading market internals, right? So for example, The best way I could wrap this up is let's shrink this down. Come on. There we go. And we're going to bring up the SPY. So this is the SPX. So this is SPX. I'm going to move it to a 30 minute, right? So this is the system, right? So this is literally the system. If you follow this, you never have to sign up for a website. You can literally watch my stream for fun. Again, once you really learn this, your eyes become very open to how the market functions and works. You'll start predicting news in the sense that you won't guess if the news is positive or negative. You'll pretty much know if it's positive or if it's negative, hell, before it even happens, right? Because it's simple. If the market is over the SMA, algorithms, computers were generally looking up, right? And as a result, things tend to go up. And if things tend to go up, then you already know CNBC is going to say what? Oh, stocks rise. And then they're going to be like, oh, well, maybe it's the AI news. Oh, maybe it's the government shutdown that's not that they're going to reopen, right? So pretty much whatever the random talking points are for like the past week or this week or whatever, the news articles are just going to tie stuff to that based off market movement, right? So if we're in a buy signal and things go up, news is going to be positive. If we're in a sell signal and things are going down, news is going to be negative, right? So here's the SPY, right? So Connor, me telling to you, said, well, we're in a buy signal. So the market's positive, right? So it's a bullish market. But then you look at today and you go, the market's just going down. This kid's an idiot. It's true, right? The market is going down today, even though I say it's in a buy move, right? So that's now we have to understand, kind of differentiating between, talking points, right, if you will, which is yes, the market is above the SMA. Yes, it's in a bullish move. Hence, that's why you've seen what? Higher high, higher low, higher high, higher low, higher high, etc. Now, obviously, if you're in a bullish move, things can still pull back, right? So that's where we do what? We look at things like this, the market internals, so that we can get a vibe for how the market's actually talking to us in real time for the day. So essentially, stock market, whether it's S&P, Nasdaq, they go through buy and sell operations. Same thing with individual stocks, penny stocks, etc. Nothing goes in a straight line up nor down, but things do flip from bullish to bearish trend. So ideally, market flips 50 SMA, regular trading hours time, 30-minute, 50 SMA, market is bullish. On the way up, it will have pullbacks. Those pullbacks can be seen or known, sometimes ahead of time, sometimes in the exact moment, like today, when you look into the market internals, which are combined tickers of your mega cap stocks, the advancing declining issues of the New York Stock Exchange, the advancing declining issues of the S&P 500. By looking, and there used to be more that I looked at. I actually kind of changed this chart around over the past week a little bit, but so it's the actual market internals. When you start looking at those, you'll be able to quickly understand why and when markets are diverging, why the price action of the Nasdaq is selling off harsher than that of the S&P 500. It's for things like that. So basically the way the storybook goes is if the S&P 500 is bullish, you're in a higher low, higher high scenario. You can predict your pullbacks within that uptrend by looking at market internals. Institutional volatility and volatility. Most of retail only look at the volatility index because retail is only really taught to look at the volatility index. So then again, they never really seek out more information than that, and then never just in hell, I only learned about institutional volatility over the past 2 weeks, and I was doing just fine looking at the VIX. And now that I know that, I'm like, oh shit, this is even better, right? So as retail, we're never really taught to look at institutional volatility. Chances are traders never get that far before blowing up, eventually quitting, or there's just such a mirage of bad information on the internet that I have also given at times, in which I'm sorry for. But there's such a rabbit hole of terrible stock market information on the internet that the chances are, a new trader is just never really going to find things that work and that are actually have edge in the market because it's just not what's taught. It's just not what's pushed. So chances are most retail traders, if you ask them what is VVIX, they have no idea, right? They know what the VIX is, but they wouldn't know what VVIX is. And it's really not their fault. It's just kind of the way the learning curve works in the system and how information is controlled. And it's really no one's, it's not any trader's fault at the end of the day. It's just the system is set up very unfairly in that sense, and that it again, it's the likelihood that you come across some of that information is going to be pretty low unless you really go out seeking to find it. And then once you find it, what do you do with the information is a whole nother thing, right? So for me, it's it's been a lot of fun over these past couple of years because you essentially come across this system, which is the S&P system, which pretty much tells you how things work at the end of the day. And then once you layer that system across multiple markets, you see that it's just a big ecosystem that follows one system and they all kind of feed off one another, right? So the best way I can explain the storybook thing again too is here. So like we said about VVIX, right? So this morning, if you were in well, for everyone, right? This is for everyone, not just Ricky. Ricky, how you doing, brother? All right, so this is institutional volatility right here. All right, so this system I'm showing you here, it's the same one as the S&P that we're talking about, the 50 SMA. So when institutional volatility breaks over that, arguably you're confirming that institutions are now involving themselves in hedging activities. Hedging activities, I'm not going to go super deep in, but you probably have some degree of it, which is, they're hedging because they're scared of what might come. They're preparing for a drop in the market, blah, 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 right? So if we're going up on the VIX, or sorry, VVIX, that means institutions are involving themselves in hedging activities. And actually, this might be a good long here because if the institutional volatility actually rejects trend, then it means we haven't really confirmed um, that institutions are fully hedging. It's like the preparation. If we were to break out, then arguably they're hedging, right? But this could actually just turn into a resistance of a hedge and then down. And then what you're going to see is the market bottom here a little bit and go through a long, which it's kind of doing already. I might have been a little late to that topic. Well, I did mention it earlier, but we're kind of actually seeing it a little bit here now. Um, but anyways, so that's institutional volatility. Um, so I will continue in just a second. Why is this lame? That's kind of lame. Anyways, so that's institutional volatility. Now, institutional volatility can give you an idea before volatility. So the storybook goes this way: institutions hedge and move markets. Volatility index, VIX, is the confirmation of volatility expressed in markets. Then it's expressed in the stock market. So if VIX starts to spike up, then the market does what? Tends to start to fall. All right. So it's always going to start many times with institutions hedging first. Their hedging will lead to the VIX breaking up or breaking down, vice versa. So it's institutions hedge. As a result, volatility increase. As a result, market becomes fearful. As a result, it's expressed in the market, down, etc. All right. So it's important to understand that VIX, when it starts to really break out, so let's go to the VIX real quick. Where is that at? It's the top one, but I'm on the wrong time frame. There we go. All right, so here we go. Here's the VIX. All right, so the VIX is all the way down here, or real down here. It's not even close to its SMA. All right, so if we were to, so yeah, in a sense, the volatility market isn't even really close to breaking out. But yeah, so if you ask me, right, we have CPI coming out tomorrow, right? CPI is a volatility economic data announcement. The market tends to just be volatile around that, right? Because it's, a big announcement. So when I look at the market today and I see that the institutional volatility is increasing, but it's not really expressed in the market on VIX, that tells me that institutions are hedging for CPI tomorrow. CPI hasn't happened, so the VIX isn't expressing it yet. Okay. What happens if CPI comes out tomorrow and it's really bullish, right? Well, the VIX isn't going to go screaming up, right? It's going to go down. But what happens if tomorrow CPI is bad and the market tanks? Well, then the VIX will go up. And that would suggest that the institution's hedgings today were correct. You see what I'm saying? VVIX is the ticker that you follow for institutional volatility. All right. So, to kind of wrap this up a little bit, hopefully, I always say that, then I never do. You do use the VIX. You do use the VIX, but VVIX is institutional volatility hedging. And when I say institutional volatility, that might be a little confusing. It's volatility of volatility, right? So if I think that volatility is going to be increasing in the next couple days, then I would be, in VVIX, right? So what you can see is tomorrow, right? Because today's Wednesday, I believe. Yeah. Um, yeah. So tomorrow we have CPI. All right. And we know that can be a volatility event. We know it could swing markets up, could swing markets down. I guess we don't know for sure. And since I don't know for sure, then maybe I'll start hedging, right? Getting some downside protection. All right. And if I'm going to start doing that, then what's going to happen? VVIX is going to go up. All right. Now, if tomorrow um CPI comes out and it's really bad and the market gets smoked, then you're going to see the VIX break out and break up, right? And that would essentially tell you that everyone hedging on institution side today, in theory, would be correct, right? If CPI comes out good and the market blows up, then what you're going to see happen is you're going to see the VVIX sell off. No harm, no foul for the big money players. They said, well, I was hedging in the event. CPI did not come out poor, so we're not going to express volatility on the VIX, right? But we were at least hedged in the event it did happen, right? So what we're seeing today is a hedge prior to CPI. We are not signaled on a full-blown sell-off today because the volatility market is not breaking out. So the markets are not expressing true volatility. They're expressing hedging today in the event CPI does end up being poor tomorrow. Those with big money have protected themselves on the downside. Okay. So that's what we're seeing. We're seeing a layer of protection coming into the market on bets today, but it's not so much so that we're supposed to tank the stock market today fully. Granted, there was a big sell-off, right? So that's what I'm getting at, right? Is yes, there was a big sell-off, but you gotta hold on. Let me bring up a different chart. Right, like yeah, I mean we sold off, but is the market in a sell signal? No, it's still what? It's still above trend, right? So the market's still positive. Yeah, tomorrow we got CPI, so maybe that's gonna, send some shockwaves through the market, but that's tomorrow. That's not today, right? So since, arguably there's a volatility event tomorrow, is the VIX really supposed to be breaking out today? Or are institutions just hedging for what's to come? So what you're seeing expressed in the market is not a bullish day, not a day that's just earth-shattering to the downside, at least yet. Things can always change. But that's the way that I would read today's market with everything that I'm seeing, with the data coming up, and so on and so forth, right? Bitcoin, ooh, a little, might have to start calling this shitcoin soon. But again, it doesn't really matter. Again, you guys already know here that we suggested that the bear market would start in October of this year. We mentioned that a few years back. Those that obviously follow closely, most people would never know that, but it doesn't really matter. So again, when we see this, again, this stuff is so minute that again, these day-to-day price action moves. I mean, yeah, we can use them to trade futures, but at the end of the day, I mean, I'm not expecting anything crazy from Bitcoin for a couple years or whatever. So, just keep that in mind. All right, so let's look at some of these market internals again. So basically now you have S&P issues kind of being lackluster. You have the Nasdaq issues still just kind of meh. But well, the advancing declining issues of the stock market are up. The volume today is just flat. It's really nothing crazy. Yeah, so that's all I can say is, I'm not sold on the sell-off. This thing could basically get rallied all the way back up today if it really wants to. It's just a matter of some of these issues stopping their sell-off on the Magnificent Seven. So if they do slow down, stop selling off, I mean, you could easily see this market get bought right back up. I mean, we're still in a buy signal. The markets have not expressed true fear in the market yet. Someone might be fearful when they look at the stock chart today, but there's not true fear in the market as expressed by volatility measurements. Okay. So hopefully that answered a lot of questions, and hopefully everyone's kind of up to speed there on that good stuff. Speaking of, has there been any decent penny stocks since this morning? Uh, that CMCT, I traded that one a little earlier today, but again, nothing special, and I figured it was going to be overcrowded anyway. So as you can see, it hasn't really done anything since pretty much this morning. And as I flip through these ones, there's just nothing. I mean, I could have easily missed something, which I always do at some point, but yeah, I just don't see it being a day. And this is another good example too, is when the markets kind of get a little lackluster, even penny stocks don't do well. And that was another there's another false thing you hear in the stock market a lot. It's like, oh, you don't got to worry about what the stock market does if you're trading penny stocks. They have a mind of their own. Wrong. And I taught people that too. So I taught people wrong initially. It's actually very important what the stock market does in the day as it relates to your penny stocks. Because if the stock market's going down, liquidity is exiting the system. If liquidity is exiting the system, it's going to be harder to pump anything in the stock market. So liquidity does trickle from large cap all the way down into small cap, etc. So when the markets are going through buy signals and pumping up, you're more likely to see penny stocks have good market movement. If the market is pulling back, kind of like we're seeing today, maybe some volatility, hedging, etc., you might have, like I said, a more lackluster day for the markets all around for that matter. Hold on a second. I have a phone call coming in. 1 second. Okay, do you use footprint charts or something like that, level 2 data or so on? No, I don't really use level 2 data. Not that it doesn't help. I just never got good at reading it in a way that I thought was efficient for myself. But that's not to say it doesn't work, if you will. Yeah, so market's just doing kind of what we would expect it to do, just kind of suck. And when I say suck, I mean just not go up, right? That's pretty much it. Um, I have to look at a couple other things here. Regular trading. And clean some of this stuff up. See if we're going to do a 30-minute trade here. We're kind of far off from that. So, well, debatable. So this means Yeah, this is arguably where the market may try to get to today as well, down to there. Obviously, if the market turn will stay bearish, blah 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 blah. We might be looking down as far as there. There being that box I drew on the screen, etc. Yeah, so ultimately, if we give up this low a day on the market and we really start shaking and baking down, and when I say shaking and baking down, I really just mean, we arguably might take this market towards 66258. We need to take an anchor to the top of this market here now and start tracking the volume weighted average price of this sell move down, high, and then basically as long as the market maintains below those VWAPs, we'd have to stay bearish on this leg. Oh boy. Actually, I'm just making up random, just saying. Yeah, the advancing declining issues in the market rolled over pretty good there, so that's not helping the cause of the market staying kind of upwards, if you will. Yeah, I mean, advancing declining issues across mega cap stocks or just mega cap stocks in general, kind of meh. Oh, come on, baby. Hit him with the drop out type of move. Come on, or don't. And if you don't, then that's fine. Because why? Because we already know where it's gonna go. If we don't drop out to said level on the downside, then the most likely event is the market will just pop straight up to whatever level I just said. So pretty much this is how it's gonna work. We're either going down to there and or the market will have to reset the volume weighted average price here. And the only little randomness in there is a false bottom that we then anchor to here. But either way, you get the point. Pretty much those are your two options. We're going down to the green or a counter trend back up to the green, and then you'd be looking for 1 minute resistance off the volume weighted average price, blah, 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 blah. Alrighty, I gotta go to the bathroom, so I will be back.
All right. All right, since we have a little random top in there that did not hit the volume weighted average price, created a false little bottom. That means we have another new anchor spot. So now your two options are pretty much still the same as they always were. You either go down to said level, or now the counter retrace would be into volume weighted average prices on the upside. So in terms of, for example, very short-term trading, I think that one was yeah, short position. So like for example, oh, there's your back test as expected, just like that. Bing, bang, boom. Again, like I said, there's only so many different options that can happen on a stock chart at the end of the day. So if we end up taking out, oops, excuse me, we end up taking out pretty much where we're at now, we're going to spike up to the next one and so on and so forth. Just like that. And ready, ready, get it, do it. Don't be a Sally. Don't be a Sally market. You're gonna do the old shy Magoo. Sometimes they like to be scummy, but see, that's the scummy move right there. Not giving you the full tag, shying, but very close. But again, still we're in the same position, which is the same thing it's always been, which again is you know, this level here or the one below. Crazy day here in the YouTube stream. Crazy, crazy day. Super cray. Markets just literally cannot make up their mind in this bottom. They go, I don't know, do we want to break down or not? Would you guys just take this market down to where we know it wants to go already? Whoever these market makers are, just make things easy on everyone. Just hurry up and do the thing. Oh, nope, you still want to hold some scammy low? Sure, why not? Why not? How to anchor view apps. Go to TradingView, create an account if you don't have one already. Go to whatever tool stuff they have on the side of the screen or upper side, find Anchor View app, click it, start playing with it on your chart. It'll take you about a day to learn how to use it. Right click it, you can change the settings. It's not fancy. It's literally just finding it on TradingView, grabbing it and clicking different candles on your chart and adjusting the settings. I only anchor to highs and lows and occasionally open high, low, close forward settings, but ultimately, yeah, I mean, I'm not going to do a whole little tutorial on anchoring view apps. It's very simple. Just go to TradingView, find Anchor View app, and just put it on your chart, and it's pretty much all you got to do. And then from there, you just change the settings from either high to low. If it's bearish, anchor to the high of a move. If it's bullish, anchor to the bottom of a move. That's how you find lower lows and lower highs across really many time frames.
to a degree. Um, like right now, we're using, like for example, this arrow here is pointed to a 30-minute volume weighted average price, and we're currently using a 1-minute volume weighted average price from this dropout to control the micro trading price action down. So as long as we're below essentially that VWAP I keep moving this arrow to right now, as long as we're below that, then we're rolling the 1-minute chart down, right? To a degree. There's more to it than that, but if I could make it simple-ish, that would be that, you know. Come on, Spy. Just do the thing already. Come on, Spy. You can do it, buddy. Just do that thing where you just go down to where you should go down to, Bubba. Come on, little guy. You can do it. It's not that hard. All we just need is a couple of retail traders to come in and take this what looks to be like a random 1-minute bear flag, just have them all chase it down. Come on, little guy. Institutional volatility is creeping up a little bit more there. If we start to break that up, that could be another little sign for us to take this puppy lower. Oh man. Come on, market. You can do it, little guy. Come on, market. Do something fun for us. Let's go. Get to the sell target so we can complete at least a portion of this sell move and then maybe flip this into a little bit of a long scalpable bottom. That would be great. Or you can just keep scamming this low. Whatever you want to do. Alrighty. Again, just as it always is, no big deal. We're just popping back to volume weighted average prices of previous lower highs. And this is basically just still a random little resistance. We actually still haven't tested this volume weighted average price, which tells me they'll eventually probably do it. But either way. I'll just clean that up. I mean, that's basically, yeah. What a crazy day here in the old YouTube stream, folks. What a crazy, crazy day. The advancing that's funny. The advancing declining issues are going just down. Nothing's really bouncing in the market, but somehow this market's bouncing. Like, well, I mean, I guess there is some stuff. I mean, oh my gosh, the market went to the arrow on the screen. That's kind of lucky, I guess. Like we said, I mean, there's only so many options. They're either going to sell it down to the sell target, or we're just going to reverse the short-term trading market back to their volume weighted average price. So that's job well done, folks. Job well done. But I mean, yeah, there was definitely some bouncing on the you know, mega cap stocks there. So yeah, it makes sense we're kind of getting held up. But either way. Still like to see it go down to that price of 662.60. That would be great because I don't really care for it long where it's at. I could see a value in an oversold long there. Probably won't amount to anything too crazy, but it's definitely a better opportunity than where we're at right now, in my opinion. But I don't know anything. This is my first day on the job, so definitely would not listen to anything I'm saying. Advancing declining issues still going down. Tick charts are oversold. So, tick charts getting oversold, leading into potential 30-minute support. Does kind of make sense for a little long bounce down there, potentially. Yeah, we're not in a bullish market. That's like, trying to bounce this market for a short-term trade around a 30-minute volume weighted average price. Do 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 do. Yeah. Institutional volatility again has not actually broken out. It's just hedged for tomorrow. Just an FYI. Which does kind of tell me that clearly some of the smart players don't have the best feeling about tomorrow's CPI so far. If they weren't scared about it, then we probably wouldn't see the increase in VVIX today. So it tells us that there's at least some people in the know or smarter than us that are suggesting that they should be hedging. So that's something to consider for tomorrow. Yeah. And if CPI ends up being bad and it's not good and blah blah blah, then yeah, arguably we'll see our volatility index tomorrow towards like maybe 18, 19.
Or well, sorry, 18, yeah, like $19 or so, 1886, 1850s. Yeah, I mean, a CPI ends up getting announced and the market tanks, and we should expect that the volatility index will be priced somewhere around like 19 tomorrow. Are we finally gonna get our sell target, SPY? Come on, little guy. Yay! Well, almost. Yay! Well, almost. Yay, target cell complete there. Well, just a target on the downside has been completed there. All right. If there is no support found here, we're going to be looking to maybe the next one down. Let me just double check. It's not like we're seeking out a major support. Yeah, so let's see. Yeah, if we don't basically build a support here, we're going to keep looking down to this next zone. So we'll expect the sell-off to basically continue to basically right there and then into this area right here. So this is our next kind of sell target down for the market. There you go, selling off right into the expected areas. And that, ladies and gentlemen, is how you kind of predict a sell target. And there you go.
Don't know why. Don't know why you can't hear me. Hopefully you can now. I don't know. Maybe I accidentally had something muted on accident. Yeah, I might have had something muted. My apologies. Yeah, pretty much. I don't know. I just repeated a bunch of stuff, which is doesn't even matter. We're not even gonna go over it again. But our bounce is working really, really good, guys. Everybody doing really, really good. Best case scenario would be this market bounces all the way back up to there. That would be the best case scenario for the bounce right now that I could envision. So if we do a 30-minute VWAP to 30-minute VWAP move, which happens from time to time, we will see this market basically go from here to there. And also, in order for that to happen, you're going to need, like, obviously the market internals to do well and all that good jam. But, that is something we do look for. We look for 30-minute VWAP cycles from, VWAP on the low to VWAP on the high, blah, 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 yada, yada, yada. You already know what the dealio is. Oh, boy. Talk about being tired. Should probably remove that big arrow so you guys don't just think that's like a guaranteed play, but it's more likely to happen probably when the markets aren't hedging volatility. But yeah. We still haven't broken out the VVIX, but if we do, again, it's going to cause probably a little bit more trouble for the market. Do you think it's about liquidity sweeps? Liquidity sweeps are that's totally like a legit thing. Absolutely. Um, I mean, yes, the market goes up and down and takes out liquidity. Um, absolutely. Is the market always entirely just trying to sweep out liquidity one way or the other? I mean, not necessarily, but yes, the market tries to balance itself the most efficient way possible. All right. Um, and so that will pretty much fall into liquidity sweeps. Now would go off on a tangent about Fibonacci, but yeah, essentially the market always tries to balance itself in the most efficient manner possibly, right? So if there's areas that need balancing, the market will do its best to go and balance those areas, but it's only going to do it when it makes sense. So this is also another problem that we run into with ICT concepts. I'm not saying that's where it's coming from, but my mind instantly goes to ICT concepts because everyone teaching that and trading that, and not to say it's wrong and doesn't none of that, but we hear a lot of the liquidity sweep talk within that sort of strategy and framework. Okay. Well, the market goes through uptrends and downtrends. All right. So if the market is in an uptrend, we're most likely to sweep out liquidity zones that are left unchecked on the upside. If we're in a sell signal and the market is bearish, we're more likely to take out liquidity areas that have been left unbalanced and unchecked on the downside. So for me, it's less about the market sweeping liquidity, it's more about the markets moving in an uptrend and a downtrend. And when we're in that uptrend and downtrend, whoever has yet to get screwed over is going to get screwed over. All right. So as we talk about liquidity sweeps, let's go look at the SPX real quick, and I can probably find a couple of, ICT fair value gap concepts that I can toss on top of my strategy. So anyone that basically trades ICT stuff essentially should become significantly better if you follow this as well. All right. So let's just take I don't know if I see one in there. I mean, there's kind of one. Like, for example, like someone would call this a fair value gap, right? So, like right here, this would be a fair value gap on this 30 minute, right? This area here. All right. So that would be a 30-minute fair value gap, imbalance, whatever they call it. I don't know. Right. But there you go. So what happens? So someone would be like, oh, there's a fair value gap here, right? And so like maybe they're buying it on this. They're like, I'm gonna go get that and then down, right? And so they just get cooked going for a fair value gap. Not that it's wrong, it's just you're on the wrong side of trend, brother. Right? Versus you would have been better off trying to go get that fair value gap when the market flipped positive and then zoink, there you go. Right? Now, um, you can go back to, there's probably another one somewhere. So let's say, so now let's look at it this way. And I'll just use, I don't even know if I can find one in here. And that one doesn't really work. Maybe it's also the time frame. I might have to go something lower, but let's see. But either way, I mean, you kind of get the point. So let's see. There's really no good, well, I guess there is one there, right? So that would be, yeah, that one's kind of tricky too. I mean, here's a fair value gap right there. Really only fully fills as we shift the market positive there. Um, there's one, but it's really filled on the back test. Now, obviously, if I went into the pre-market session, I could find more setups because you get more candles. But yeah, so that's what I have to say. So let's just say, liquidity sweeps one way or the other. It all comes down to trend, and it always does. So that's my kind of issue with ICT is it and a lot of, I mean, really, yeah, ICT or, fair value, SMT divergence, liquidity sweeps, it teaches nothing about actual trend direction. So you could be trying to sweep out liquidity up or down for the life of you, and it's never going to work because you're trading against the banks and the institutions and me for that matter. And when I say me, I'm still a small fish, but when you understand the trend, you start involving yourself with the big players, right? So that's what I'm trying to do is always stay on the right side of the institutional flow of money, right? And I'm not thinking about retail ICT fair value gap divergences. Yeah, so if you're looking at like highs and lows, then yeah. So for example, you could take this high. Let's just say this high, right? So, when you're like, I'm gonna go sweep this high. I mean, yeah, you could be buying these lows, but and that's fine too, arguably. But ultimately, when the market goes into an uptrend, there goes your high take, right? Then, you might say to yourself, I want to take out, but then it's like, what, like, or for example, say you go, okay, well, now I want to take out these lows down here. Well, for one, so say you want to take out these lows here. All right, but you're in an uptrend. Well, you're not going to do that, right? It's going to be when you go into a downtrend and the market accepts it, if it's going to even happen, right? So then here'll be your down, sweep lows, maybe there, right? And then you're like, oh, okay, now I want to go take out these highs on the top. Well, now it's like, well, I mean, you could buy the lows hoping you go up, or it's going to happen most likely when the market enters an uptrend. This one's kind of choppy, back under, back over, etc. So, um, I guess it just depends on what exactly you're looking at, but I just do my best to try to stay on the right side of the trend. Um, yeah, so that's that. It's a busy day here in the YouTube stream. We got 14 people. That's awesome. Also, the institutional volatility just broke out a little bit. So if we look here, see this? Are you guys ready to see something that's not really crazy? It's literally just the price going above one line right there. That's that. So what you just saw right now is what? And look at the setup too. Not that the setup really matters, but you can see how, right? So where did they, you could just call this like a little 1 minute bull flag that happened where? Over your 50 SMA. Right, there's your 1 minute bull flag. As the VVIX institutional money flow gets positive, and there's your 1 minute breakout. Right? What's happening to your market? Your market's going down again. It's not doing well. Again, we're having some hedging going on with the institutions today. Most of the YouTube streamers today are all so confused why the market's going down. they're probably looking at some sort of bear flag, or they're probably looking at the news and going, "Oh, the government shutdown." Nah, 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 folks. You just got smart money is hedging their bets for CPI tomorrow, and you don't have many bullish market internals on the day, so there's really not much to be happy about in today's market for buying it up long. Here's another thing too, Ricky, is golden pockets. So like for example, if we look at this, just for example, this 30-minute chart, this 30-minute chart has, let's see, no golden pocket test on that candle. So that's going to have to be checked at some point. There is maybe a golden pocket test now. Yep, we actually just had, well, it's actually debatable. I might be off a little bit, but in theory, the golden pocket of this move has not been tested. Very close. Right? So that's unchecked. We can also see that those are in balance. That's in balance. This one might be. So right here, there is a candle with that one's been tested, so that's fine. We're not worried about that one anymore. What about this guy here? All right, so that has no golden pocket test. That means we're going to test that at some point. This one has no golden pocket test. We're going to test that at some point. So if you think about it like that, right? So the market flipped positive here, and on the way up, at least on this 30-minute time frame, we have one, two, and in this case, like three, maybe four. There's a couple candles that do not have golden pocket tests, which basically means at some point the market's going to go to those candles. It's just bound to happen, right? And the reason being is because the market likes to balance itself in the most efficient manner possible. Fibonacci, well, yes. So markets are all about efficiency, right? Fibonacci is a mathematical equation used in the universe to most efficiently build the universe and the galaxy and seashells and the human body and trees. It's how plants know to grow two leaves, then four leaves, then five, eight, etc. Mathematical memory, blah, blah, blah. Apply that to the market basically means we have a bunch of inefficiencies within this market that have occurred since this buy signal. The market will balance itself at some point because that's how efficient markets and whatnot work, or inefficiencies get balanced. If the stock market was perfectly efficient, there would never be an untested golden pocket. Every golden pocket would always be tested. There would never be a fair value gap. But markets are not totally efficient. So we have scenarios where fair value gaps get left open. Golden pockets of candles, whether it be a 5-minute, 30-minute, 1 hour daily, are untested. Those all have to get checked at some point for the most part. The markets are inefficient in the sense that they don't always have to get tested. It's very likely they will, but you could go back on a chart and you could find some daily candle from years back that never had a golden pocket test and blah 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 blah, right? But it's just very, very likely that they will, so on and so forth, right? Now, if you apply that logic or you kind of compare it to how Fibonacci works in the universe, right? The universe is a very balanced place in the sense that energy cannot be, energy can only be transferred, it can't be destroyed, right? So all energy in the universe has to find a home one way or the other, because again, it can't be destroyed, only transferred, etc. So mathematically behind the scenes, there's a bunch of Fibonacci always going on in the universe, and it's doing its best job to efficiently find the home for energy that has to be transferred and not destroyed. All right. You apply that logic to the market, market creates inefficiencies at times. Markets will do their best job to correct those inefficiencies, just as the universe tries to do its best job to direct energy where it needs to go, following the mathematical Fibonacci equation, etc. All right. Energy can only move forward or backwards in a sense. So if you think of Fibonacci and you think of, yeah, fibs that you pull on a stock chart, right? People are going to teach you what? Well, this is what they're going to teach you. Same as me, essentially, right? So what are they going to teach you with Fibonacci? Markets essentially go to the golden pocket, you look for a bounce, and then you look for it to go to 161, right? That's pretty much like the gist of it, right? Or it's like look for the market to go to one. So pretty much, right, in a nutshell, markets are either going up to 161 or pulling back to 618. Now there's more to it than that, but that's pretty much the main gist of it. All right. So if you apply that to the universe and you apply that to energy, energy can only be transferred, right? And in a sense, it can only go forward and backward, just like a stock chart can only go up and down. So in the universe, energy is either going to be essentially transferred forward or reciprocated backwards. And it's just trying to find its balance where it can go home to. Apply that to a stock chart. Markets can only go up and they can only go down. They will balance themselves how they see most efficiently, whether that be up or that be down. And to a pretty good degree, it's going to follow the Fibonacci sequence. All right. So that's where we're at with all of that. So yeah, you know. And then to make that point to hit home a little bit more, I could probably could probably show you on a 5 minute chart today some pretty decent examples of this. Ready? So let's see if we can find, there's maybe a few in here. All right. So if we take each 5 minute candle, so let's start with this one going down. So you'll notice what? That this pretty much tests the golden pocket, right? So this candle here closes, and at the time of closing, it had not tested the golden pocket, nor had the market transferred the energy to 161, right? So let's think about this. It can only do what? When this candle closes and doesn't have a golden pocket test, it can only do two things. Either test its golden pocket or go to 161. In this case, we get both, which is the back test. This freaking, I gotta go use my Zoom one. So you can either do what? You can either test 161. I mean, you could even go higher than that, sure, but ultimately, what's going to happen? You're either going to get this or you're going to get that, right? You could go higher than that, but even if you went higher, you're still going to get that, right? So there's how markets on the 5 minute are transferring their energy efficiently, both to 161 and 618. Now, let's go to the next candle. Well, this one kind of crappy, but it'll still work for the purposes of whatever we're doing. All right, so let's do this. So we're going to move this fib to the next 5 minute candle, and we're going to measure the high to the low. There we go. All right. So what can markets do? When that 5 minute candle closes, they have basically two options, up or down. All right. It's either going to go to 161, which is there, or it's going to go to 618. In this case, the market balances 618 and does whatever. So essentially, the market is efficient. It balances itself. All right. It doesn't have to go to 161 and make a great trade for you. Market just has to balance itself the best way it sees fit, which is either 161, 618, et cetera, et cetera. All right. So we'll continue over. All right. Now, this is probably a pretty decent example. So we're going to take this one and we're going to go here. We can see what's up with this candle. This candle has no golden pocket test, right? So if we measure this 5 minute candle, it's closed. So once it's closed, we can measure it on a fib. Next 5 minute candle opens, and you'll see what? Market never actually tests 618. And then what's it do? See how it fails to go to 618? So everyone buying this bottom eventually stops out. And what's the market do? It balances the market down to 618 and lower, but that's the problem of everyone buying this dip. If they're not correct and it bounces, they have to stop out, and the markets have to efficiently price their stop out, right? Or that energy, right? So take all of the buy orders, all the buy orders, all the buy orders. That's energy in markets, demand in markets. So we'll just call it energy. So all the energy buying is wrong. They're wrong, they stop out. How do we move that energy? Downwards. Where to, though? 161. That would be efficiently balancing that stop out, if you will. But that also says what? That this 5 minute chart's still not balanced, totally efficient, because we don't have a 618 test. We've just taken that energy and moved it down, but we're still not balanced there. So that means at some point we're going to come up and test that, right? So there's that. I think we can even see one here. So if we take another fib here on this 5 minute, we're gonna go from here to there. All right, and we're gonna move, where is this at? Oh, it's right there. So it really should be that way. Like that. Wait, hold on, I'm doing something wrong. No, that's right. All right, so even this 5 minutes is not balanced, right? So like right here, this new 5 minute. So we have this 5 minute candle, it closes, and you can look at the chart. Look at that 618 never gets tested. Everyone sells it down to 618, right? So this same logic can be applied on daily charts, 4 hours, 1 hours, 1 minutes, etc. But that's pretty much it. All right. So going back to your question about markets and balancing and what was it? Yeah, sweeps of liquidity and things like that. The market essentially is just always trying to balance itself most efficiently and accurately as far as, that's concerned, which ties a lot into Fibonacci and how mathematical fibs work in the universe. And you could look at fair value gaps or high-low sweeps. Sure, again, it's just markets are just balancing themselves one way or the other. Um, and it's going to help when you know the trend, right? Which way we're really trying to balance stuff. So, yeah, that would be that. So it looks like something has happened somewhere. All right, so remember we talked about the VIX, the 15-minute chart. So this is a little precursor. So essentially, if CPI is legit, it comes out terrible. We're going to break out the 15-minute chart and the VIX is going to run to $18, $19 tomorrow. That's if CPI is bad. We expect VIX is going to be priced around $19, right? Um, Again, I have no idea. We'll see, right? But on the flip side, we can also see that institutional volatility is breaking out a little bit today. So we got to ask ourselves, why are the smart players hedging right now? Again, CPI tomorrow. That's it. And either they know it's going to be bad, that's why they're hedging. Because I'm assuming if CPI was good, then no one would be hedging. There'd be no reason. But obviously, markets probably don't fully know exactly how that's going to work. So we're seeing a little bit of a hedge going on for CPI tomorrow. And you can expect if CPI is bad and it gives a good little spanker McDanker, then you're going to see the VIX go up to 19, right? Like that's just gonna happen. To me, there's no ifs, ands, or buts. There's only two things that can happen from like this point in the VIX. It either is gonna go like this is it. So this is the 15-minute breakout. So you see how we ran the markets up to here? That's the 15-minute trend. 15-minute trend not ready to break out, hence pull back, then go up, then break out, then pull back, sustain the 15-minute trend breakout, now grind away. CPI is bad, this is going to go to 19, right? So right now the VIX in a sense has only two things it can really do. Maybe I haven't fully analyzed, but from my quick take on things, VIX can only do two things. Everything can only do two things, go up or down. But once you know those SMAs that you're tracking, it would either be a pullback to here or it's going to be continuation there. That's its only two options right now. Again, a lot of it's going to come down to CPI. CPI is bad and just tanks the market. VIX is going straight up to 19, if not higher, right? If CPI isn't bad or whatever, right? The VIX will probably stay elevated going into tomorrow because of CPI. And then once it's announced, if it's bad, boom, right? If it's announced and it's good, this is going to hit here and then it's going to go below. And then we'll be and then we'll restart the 15-minute downtrend on the VIX and then use that to be relonging the market on CPI or whatever. So yeah, that's the full scope on the market. But I'll probably end it there. It's 11 o'clock. No need to stick around here longer. We've already mapped off pretty much the day. We pretty much told everyone not to bet long by us once the market opened. Talked about a couple little scalpable bounces. Gave you guys pretty much every target on the downside so far today. All you get literally. So we've done a great job today here on the stream, I feel. Kept everyone on the right side of the trend, on the right side of the trades for the most part. Mapped off the VIX efficiently. We told you where that would go, when it would break out, what was going on with the hedging of volatility. what you can expect for tomorrow. You already have the price targets of the VIX for tomorrow. You know what I mean? So I don't think there's a whole lot more we need to do. I think we're all pretty good set up for tomorrow. Expect VIX breaks out, goes to 19, or fails breakout. It's going to reset to 1769. All just depends on how CPI comes out. All right, guys. Cheers. Have a good one. Don't do anything too crazy until tomorrow. Well, don't do anything crazy tomorrow either. Just be chill. See you tomorrow.